I want to start off, first of all, mentioning gold. We are back above $5,000 in gold. Last time I did the podcast on Tuesday, we were back below. In fact, we were below 4,900. We got to like 4,880. But what I've been saying is that any dip below 5,000, you just got to buy it because 5,000 is really the support. Not that we can't go below 5,000, but that we don't go below it by very much, and we don't stay below it for very long because there's a lot of accumulation going on in gold. Silver is about 78.5. Both gold and silver were higher on the day, but I think more significant than what's going on in the gold market is what's going on in the black gold market. I'm talking about Texas tea, oil. Oil hit a new 6-month high today. It's trading above $66.50 a barrel. We're now up about 21% from where we were at the lows mid-December. So less than 2 months, 21%. I think that prices are going to continue to rise. I think that by the midterm elections in November, oil will be at least $80 a barrel, maybe closer to $100 again. Ultimately, we're going a lot higher than that. Now, I don't know. Trump might try to do what he can to try to get the Saudis to, kick up the pumps. But it's going to be a problem for the Republicans at the midterms because oil prices, I believe, or gas prices at the pump will be higher on election day in 2026 than they were on election day in 2024 and higher than inauguration day in 2025, meaning that Trump will have delivered higher, not lower gas prices by the time anybody gets to express an opinion on the Trump economy. And that, again, is going to be a big problem because drill, baby, drill didn't really pan out. Gas is going to be higher, not lower. And one of the reasons for the increase in oil prices yet to come, I believe, is going to be the weakness in the dollar. I think the dollar is about to get a lot weaker, and there's two examples of that I want to discuss. The first one being the U.S. national debt, which now passed $38.7 trillion. We're up $2.6 trillion since Trump took the oath of office. He's barely been president for more than a year. He started in January 2025, and this is February 2026, right? So about a year in office, and he's already run up $2.6 trillion in debt. Now, remember, the Republicans rode into office on a platform that Biden's deficit spending was the problem. That the reason we had the big spike in inflation was because of all the spending under the Biden administration, which was partially true, but it was also a result of all the spending under the Trump administration. But forget about that, right? They didn't want to focus on the deficit spending under Trump. They just wanted to focus on the deficit spending under Biden. Well, the problem is the deficit spending is continuing under Trump 2.0. Yet Trump, 47 is spending more money than Trump 45. And ultimately, he's going to run up more debt in his second term than Biden did in his only term. And if the Republicans were correct that we had high inflation under Biden because of deficit spending under Biden, well, why would we have anything different under Trump? If we're going to continue to have deficit spending under Trump, then why would inflation not also go up? And it's amazing. You've got all these Republicans out there, these cheerleaders for the president, talking about how there's no inflation. But the same guys are blaming the Biden spending on the inflation under Biden.
Peter Schiff says oil at 6-month high kills Trump's cheap gas narrative. Dollar collapsing under $38.7 trillion debt, $2.6 trillion added in 1 year, tariffs backfire, imports up, exports down, trade deficit soaring, housing at all-time lows, gold support. $5,000, $6,000 plus coming.
The forecast was for $55.8 billion for December. It came out at $70.3 billion, way above estimates. The prior month was revised down a little bit to $53 billion. So if you compare the increase, we went from $53 billion in November to over $70 billion in December. That is a huge increase, and it shows that all this so-called progress at reducing the trade deficit is just another one of the Trump lies, another figment of his imagination. If you look at the merchandise trade deficit, the goods trade deficit, that one came out at $99.3 billion. I'm not sure what the expectation was. It was a lot lower than that. The prior month was $83.6 billion. And the reason that the numbers got worse, and this is from, I'm going to give you November and December. In November, imports were up 5.9%, and exports were down 5.2%. And in December, imports were up 3.8%, and exports were down 2.9%. So this is the opposite of what Trump has been promising. This is the opposite of what the tariffs were supposed to deliver, right? The tariffs were supposed to shrink the trade deficit. We were supposed to import less because the tariffs made imports more expensive. We were supposed to export more because we were going to make more stuff ourselves, because the tariffs would mean that we would produce more here, or also, too, we wouldn't have to import as much because we made stuff ourselves. The opposite is now happening. Imports are going up and exports are going down. Oh, and by the way, you know, I don't know if I mentioned it on the last podcast, but the New York Fed came out with a study. And the study showed that 90% of Trump's tariffs are being paid for by Americans. Now, I think the only reason that the other 10% is not also being paid for by Americans is either because the study got it wrong, or because initially there may have been some companies that may have reduced prices a little bit to try to maintain some market share, but over time that will go away. Ultimately, 100% of the tariffs will be paid for by Americans and ultimately by consumers. Maybe initially producers, U.S. companies will absorb some of the hit, but ultimately all of the hit will be borne by the consumer. That's how taxes work. Right? The indirect taxes work that way. I mean, you don't even need a study to prove something so basic. I mean, it's Econ 101. It's not even econ. It's common sense 101. It's obvious that we pay the tariffs. I don't have to study what's obvious. We already know that. You know, what's amazing is that the Trump administration doesn't know this. I mean, can they really be this dumb? And if they know this little about something so simple, man, how are they going to understand more complex economic problems if they don't even get tariffs right? And apparently, you know, Donald Trump keeps saying that tariff is his favorite word in the dictionary. Well, he can't even define it. He doesn't even understand what it is. So what about all the other words that he doesn't know the meaning to that aren't his favorite word? But so the study shows that we're paying the tariffs. But the problem with these tariffs, apart from that, is that they are not protecting American industry, because most of the stuff we're tariffing, we don't even make. We don't even have the capacity to make it. Or if we do make it, we don't have the capacity to make enough. We've got to import it. And now the tariffs are just making those imports higher. And you can see that in the data, in the import-export data. I mean, it's obvious. See, the only way that foreigners, if they were really paying the tariffs, you would have to see the price of the goods that we're importing go down, because the tariffs are paid here in America. We pay them. We write the checks. The importers send the money to the government. So the only way that foreigners would be eating the tariffs would be if they lowered their prices, so that when Americans buy the goods with the tariffs, they buy the good at a lower price, and then the tariff just brings the price back up to where it was before. But that's not happening. Our imports are not going down. We're paying more to import the products. So that means, by definition, that the foreigners are not eating our tariffs. And one of the ways they were supposed to swallow our tariffs was because the dollar was supposed to go up. Their currencies were supposed to go down. So it wasn't supposed to cost us as many dollars to buy their products, and that was going to offset the tariffs, and so they would eat it because they would be getting fewer units of their own currency, or they would get fewer dollars, rather, for their exports. But that's not happening, because the dollar's gone down. The dollar is lower today than it was on Liberation Day. So not only are Americans paying the tariffs, but they're paying more to get the foreign currency to buy the goods. So the goods are more expensive, and on top of that, we've got to pay the tariffs. But the tariffs don't just hit the American consumer. They hit American businesses that are producing the goods that are subject to tariffs. And it makes their goods more expensive. Well, now if we're going to export those goods, our goods are less competitive than they were before, because it now costs us more to make them than it did before. And also, depending on the tariff rate in the particular good, if American manufacturers have to pay these higher tariffs, but foreign competitors don't, and if the tariff coming in from a particular country is not as high as collectively the particular tariffs that were paid by the American company, even American companies can be rendered less productive because they're paying tariffs that their competitors are not. But the proof is in the pudding, because exports are falling and imports are rising. So the tariffs are backfiring in that respect. And remember, Donald Trump did the same thing during his first term. He was elected on a platform of lowering our trade deficits. He made a campaign issue out of our record high trade deficits under Biden. He was going to do something to bring those deficits down. Instead, we hit new records under Trump. The trade deficits went up every year, I think, that Trump was president. And when he left office, trade deficits were at an all-time record high. And I think we're going to get the same thing. And the dollar goes down. All the stuff that we need to import but can't produce ourselves becomes more expensive. And so our imports get more expensive. And so our trade deficit goes up because the things that we buy cost more. Right? So our imports go up. Now, maybe the volume of imports might go down somewhat because we buy less, but we pay more for what we buy. So net, we end up with a bigger trade deficit because the cost of our imports goes up. Now, you might think, well, maybe we'll export more because our exports get cheaper for foreigners to buy. But our imports are a much bigger number, right? Because we have a trade deficit. So by definition, we import a lot more than we export. So even if our exports go up because our currency went down, if our imports also go up by a similar amount, the trade deficit gets bigger. It doesn't get smaller. And that's what's going to happen. We're going to see a weakening dollar resulting in even bigger trade deficits, which is going to scare foreigners out of their dollars, because it's not only going to be the trade deficits going up, it's going to be the budget deficits going to be going up. They revised the drop a little less big. It was 9.3%, and it was revised to 7.4%. But it was a huge, huge drop in pending home sales. And the index was at a record low, 71.5. Or actually, it was 71.8, the original number. Well, even though they revised the drop to a smaller drop, they revised the index to a lower number, 71.5. Now, they were expecting a bit of a bounce back in January. They looked for a 2.5% bump in pending home sales. Instead, they dropped again, 0.8%. Nobody expected a drop again. Everybody thought that we would have a bounce, maybe 0.2% on the low end to up to 6.5% was the high end. We dropped 0.8, and that drove the index, the pending home sale index, down to 70.9. That is an all-time record low. I mean, even if you go back, I think, to the financial crisis. So why is it that homes aren't selling? Because they're too expensive. That's why. The prices are too high. People can't afford them. Now, what does that mean? That means that prices are going to come down. They have to. Because houses are just worth what people can afford to pay. Because if you have to sell your house, you have to take the highest bid you can find. Now, what's happened for a while is people haven't had to sell. They want to sell. They put their house on the market, but they don't get any takers. Eventually, the offers have to come down to meet the bids. And the bids are way down. Because even though mortgage rates have gone down recently, thanks to Donald Trump getting the GSEs to start buying mortgage-backed securities, we've been able to bring down mortgage rates. That's still not enough. Because even though mortgage rates have gone down, it's not nearly enough for people to afford the home prices. Home prices have to come down. I'd say about a third, which is about how much they came down, in 2008, 2009, 2010. We need about the same decline in housing prices as we had, after the housing bubble burst, because we got another housing bubble.